Welcome back to the show, everybody. Well, we've got the highlights from the Senate Banking Committee. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Right now, it's $1.1 trillion market cap for crypto. We are up 3.1%. Good afternoon, everybody. It's been a busy day. I've had a lot to do, but it's been so good. We're about to reveal the XRP Las Vegas 2023 website. You're going to want to see this site, and you're going to want to get your ticket immediately as soon as you see it, because it is going to sell out. It is going to be a capped event, and there will be a limited number of seats. Do not mess around once that link is available. It will not be under this video, but I'm telling you to watch out for it today, ladies and gentlemen. Right now, Bitcoin, 22,700 plus, Ethereum, 1,500 plus, Tether market cap is 69.4 billion, they say. 38 cents for XRP. Oh my goodness. And the next video you're going to see after this one, besides these Senate banking highlights, which you want, trust me, you want this. This is revealing where they're going, ladies and gentlemen. We also sat down with one and only John Deaton today. You're going to see that later today as well. Before we get started, it's linked to, and let me tell you something, if you're accredited for the next few days, and it's only for a few days, they're dropping XRP into your Uphold wallet with special pricing. I'm telling you, you can't mess around. At this time right now, like Ripple, these things, they're not going to last forever. We could be down to a matter of days, if not weeks, for a ruling in SEC versus Ripple. And we know from Brad Garlinghouse they intend to have a public exit. PolySign, link to all of this. I'm telling you right now, special XRP promotion going right to your Uphold wallet. Don't mess around. Click the link for link to underneath. Check out my sponsor. You can't make it up, ladies and gentlemen. We know about the devastation that went on overseas in Turkey and Syria with the terrible earthquake that happened. Ripple now showing that their heart is as big as the world that they are built to serve, as they commit $1 million in support to the people that were harmed there. I tell you, it was a horrible thing. I've seen video clips, and it is just, it's horrible, horrific. And I hope they're able to save as many people as they can. Coming back to the crypto space here. Look, there's people asking, like Ryan Sean Adams here, okay, crypto, what's the best way to fight this rogue SEC? Well, first of all, Ryan, welcome to the game. It's the fourth quarter. We're down 2 touchdowns and the ball's going this way. For over 2 years, John Deaton's been fighting this fight. Let's get with Crypto Law US. Connect with Congress, Ryan and everyone. This is not a tribal effort. At this point, I have said it, and you're going to hear me say it again in the interview later today with John Deaton. John Deaton is representing the entire retail investor space, the secondary market at this point. The fight is well beyond XRP holders now. Don't believe that. It's still true. U.S. Congress, not the SEC, will set the cryptocurrency regulation, says Blockchain Association. That was Jake Travinsky. And you know what? Shout out to Jake, because, you know, I think this fight was, look, you guys know I've been open. I thought early on in this fight, you know, we didn't see enough attention from the associations, but they're here now. And you know what? Shout out to Jake for being here now. There is no time for us to say, well, we've been here, where you been at. This is the time for all of us to unite. And we're glad Jake is with us. This is a quick clip. Senator Tim Scott ain't got a problem saying it. He's asking where Gary Gensler is, why he's missing this opportunity. I guess clarity, transparency, and accountability stop just short of Gary Gensler and the SEC's doorstep. Take a listen here from Senator Tim Scott.
As I want to address the elephant in the room.
Get him.
If Chairman Gensler is going to take action, enforcement action, Congress needs to hear from him very soon. The chairman had lots of time to do the rounds on the morning talk shows. If he has time for that, he should be here testifying with us this morning. And I hope that we see him here very soon.
You can't say it any better than that. You just can't say it any better than that. And let me tell you something. I've got the highlights here, and we're going to hear them. And let me pull this open because I've got just the clips you're going to want to hear. Professor Reiner here is absolutely from the Goldman Gary Gensler School. Let me start with that. And let me pull this clip up and start you right here. Okay, here it goes.
Action that only Congress can provide.
Well, let me set the play speed back on this. Actually, it is enjoyable to listen to it at that speed, but listen to this.
Well, I agree with SEC Chairman Gary Gensler that most cryptocurrencies are securities subject to SEC registration and disclosure requirements. Some cryptocurrencies, like Bitcoin, are commodities. While the CFTC regulates commodity derivatives, they do not regulate commodity spot markets. The practical effect of this structure is that cryptocurrency exchanges in the U.S. are presently not regulated at the federal level. In my written testimony, I provide a detailed roadmap for how Congress can close this gap. I urge Congress to carve out cryptocurrency from the definition of commodity in the Commodity Exchange Act and recognize cryptocurrencies as securities under a special definition to the securities laws. This would give the SEC exclusive authority to regulate all aspects of the crypto industry. The SEC simply has more expertise, more resources, and more appetite for enforcement in the crypto realm than the CFTC does. Most importantly, unlike the CFTC, the SEC has a statutory mandate to protect investors. Whatever Congress decides to do, the status quo is simply untenable. I look forward to discussing the way forward with you. Thank you.
Well, I tell you something, and we are going to hear more that you're probably not going to be fond of. Now, listen, I'm not saying the market doesn't need regulation. Of course it does. I think the problem, just for clarity here, is the way that Gary Gensler's going about regulating this space just through enforcement alone. That is where we have a lot of problems. Now let's get to the next clip. Mr. Reiners again. And I'm playing him today because this is the opposition, ladies and gentlemen. And he's coming hard and strong with the Goldman Gary Gensler playbook.
We've had a basic bargain in our capital market since the 1930s, and that is that companies that want to raise money from the public have to disclose the risk involved in that. And then investors are free to choose what risk they want to take. And so I see no reason why that principle shouldn't apply to crypto, although I'll agree with Professor Yato's point that maybe the specifics of what gets disclosed can be debated, and I think the SEC does have the authority, and I think Congress should give them the authority to draft customized disclosure regimes for certain decentralized crypto products, and the EU is moving in that direction, but disclosure is necessary.
And let me get you to the next clip where he's going to they're going to talk about FSOC, ladies and gentlemen. Oh, yes, they are. Oh, yes, they are. Right in here.
Chairman, last fall, the Financial Stability Oversight Council released its 2022 report on digital asset financial stability risks and regulations. And one of FSOC's recommendations was that Congress pass legislation providing rule-making authority to financial regulators over the spot market for non-security digital assets. Mr. Reiners, why is it important that Congress address this gap, and how would you propose that we do it?
Take a listen.
So, Senator Menendez, for the past 10 years or so, the big debate when it comes to crypto regulation is, are these things commodities or securities? And of course, the Howey test is principally what's used to determine whether or not a given token is an investment contract and therefore a security. Now, I happen to agree with Chair Gensler that most cryptocurrencies are securities, that they meet the Howey test. But there are some cryptocurrencies, and I'll just use Bitcoin as an example, that are decentralized enough that they are commodities. And the CFTC regulates commodity spot markets, but they don't regulate commodity spot markets. They only regulate commodity derivatives markets, although they do have fraud and manipulation enforcement authority in commodity spot markets. So that is the gap that needs to be addressed. And so what I recommend, and I have this detailed in my written testimony, is that Congress carve out the cryptocurrency from the definition of commodity in the Commodity Exchange Act and include cryptocurrency as a new category of security under securities law, so that's clear to everyone, to the market and everyone else, that the SEC has exclusive rulemaking authority and jurisdiction over cryptocurrency.
Mm-hmm.
There is the fight right there. Just to be clear, the senator had mentioned FSOC, which, by the way, if you're not aware, is a panel of all the market regulators and prudential regulators put together. Let me bring you to another hot spot that you're going to want to hear. Maybe not, but you're going to need to hear. You should want to hear it, right? Even if you don't, right? That's where we're going to be here. So let's start right in this section, in this particular cut. And here we go again.
I'm an admirer of Professor Allen's work, and I certainly agree with the sentiment that we should do everything we can to restrict crypto from entering the banking system. But as long as crypto's legal, then these firms are entitled to banking services. So I think the challenge is, where do you draw the line? What specific crypto activity can be done in a safe and sound manner? And so I think the banking agencies have started off on the right foot. And having guidance in place that says, if you're a regulated bank, so this is the FDIC, OCC, and Fed, all have guidance in place that says if you're a regulated bank and you want to engage in crypto activity, you have to let us know first. But again, I think more is needed. And so what I recommend is that banking agencies do a horizontal exercise where they understand all the different ways that banks are exposed to crypto, and then release that information to the public so that not only bank customers, but bank investors as well are aware of the risk. Because, the guidance hasn't been perfect. And we've seen a few banks that, unbeknownst to regulators, were more exposed to crypto than previously realized. And I would just point Silvergate as a perfect example. Over 90% of their deposits were from crypto-related firms. In the fourth quarter of last year, they saw over $8 billion in deposits leave.
Now, remember we talked about the bailout they got from the home saving loan bank sector? Check this out.
Was over 60% of their deposit base. And it looks likely that they would have failed if they did not get emergency liquidity from the Federal Home Loan Bank of San Francisco, which, of course, is not the reason that we have federal home loan banks. They exist to support home ownership, not to bail out banks that gamble on crypto.
You feel the energy coming off this guy? Let me move you now to another little section in here that you need to hear. And let's start right here. There we go, right here.
Have broad legal authority to prohibit banks from engaging in any activity that can't be conducted in a safe and sound manner. So I do think that they can do more and be more prescriptive around what specific crypto-related activities can and cannot be done in a safe and sound manner. For instance, there is absolutely no reason why banks should hold cryptocurrency as a principal on their balance sheet. Now, the joint statement that the banking agencies released at the beginning of January alludes to the fact that the agencies would look very askance at banks that wanted to do that. But I think certainly clear guidance that just says you can't do this is warranted.
Got it.
There you have it. Now let's hear from Professor Zhang, because I know that this is, it's hard to hear it all come hit you like that. Right? But let's hear from Professor Zhang right now.
Key foundational building blocks that Congress needs to consider. Consumer and investor protection, that is crucial. Mm-hmm. And having clear legal rights in the property that they purchase. When part of the problem with the bankruptcies is that the bankruptcy court had really nothing to work with in terms of legal rights. And so here's an opportunity for Congress to make very clear that when consumers purchase digital assets, that they have a property right in that digital asset. And then that will be respected in a bankruptcy proceeding. Mm-hmm. The other really important concern to keep in mind is that this kind of technology is about democratizing financial services. And that means when I, for example, moved back to the US from Europe, I had to pay $4,000 to my European bank to move my own savings back to the US. And then I also had no profit from the spread the bank made when it converted from Swiss francs to US dollars. This is the type of opportunity that blockchain technology can help with. I look forward to that day when I'll be able to transfer money cross-border to myself and actually also make part of that profit in the spread. And that kind of equitable interest in financial services is what makes Web3 different from, say, Web2. And so we have to think about how can we empower consumers, give them consumer data rights, while also protecting them through disclosures and legal protections in bankruptcy.
Well, speaking.
Well said, no doubt about it. And there was some levity there, which was nice to hear throughout this conference. But here we go again with Professor Reiners here. Take a listen.
Question, Senator. And before I address it, I want to quickly touch on the financial inclusion element that's been talked about in this hearing. There is no evidence whatsoever to suggest that crypto promotes financial inclusion. And in fact, there's overwhelming evidence to suggest the exact opposite is happening. Most people who've invested in cryptocurrency have lost money. Of those people, a plurality are minorities and low-income Americans. Okay, so this is an example of predatory inclusion. We saw the same thing with subprime loans leading up to the 2008 financial crisis, where low-income and minority communities are being explicitly targeted with very, very risky products. And unfortunately, they have lost, in many cases, everything. Now, to your point, Senator Smith, about limiting the connections between crypto and the traditional financial system, we did luck out to a certain extent. I would point back to the fall report from the Financial Stability Oversight Council, and where they said, listen, the crypto market can be systemically risky given two things. One is size. Obviously, the bigger the market, the bigger the risk that it poses to the rest of the economy. And then two is the connections between that sector and the traditional financial system. And the industry has been trying very, very hard to integrate into mainstream finance so that the two are essentially indistinguishable, which I find ironic, given that the whole premise of cryptocurrency was to bypass banks and the traditional financial system. Now they're desperately trying to get access and make themselves seem as if they're legitimate. And they use the same terminology that we're accustomed to with traditional financial institutions, right? So broker, exchange, bank, but they're not. These things have meaning, and they're using these words intentionally because they want you to think that they are regulated and just as safe as these traditional institutions, okay? And in some cases, for instance, Voyager, they were lying about the fact that they were FDIC insured, and then they had a cease and desist order sent to them by the Fed and the FDIC. So I would just, run through the list. You mentioned Fidelity attempting to put Bitcoin into 401ks. Would we think it's okay if they just let Powerball tickets end up in our 401ks? Again, crypto's just gambling. And so thankfully, the Department of Labor has sent out a letter saying that it'd be a violation of fiduciary duty for plan administrators to offer, or that they think it would be a violation of an administrator's fiduciary duty. And that, again, restricted, I'm sure, a lot of employers from allowing their employees to invest in crypto. Look at FTX. They had an active proposal in front of the CFTC that would allow them to offer retail traders 24/7 access to crypto derivatives on margin directly without the need of going through a broker or futures commission merchant. Again, if the CFTC had granted that proposal, as it appeared likely that they would have, this FTX situation would have been very, very different. Again, multiple attempts to list a ETF that tracks Bitcoin. In fact, Grayscale has sued the SEC for not granting them that permission. Again, just think of how many investors would have lost money, more money, if there had been a Bitcoin spot ETF on the market. So we kind of lucked out here a little bit, Senator, because we had agencies, at least some agencies, that were willing to do the right thing, even though in many cases it wasn't popular. And I think going forward, we need to have a clear regulatory framework, as I addressed in my written testimony, to make sure that crypto doesn't integrate into the traditional financial system, because they're continuing to try and they will not stop.
Now, a couple things. One, we've talked here about, making sure that you assess your portfolios for yourselves. Make sure that what you have better have a use case, and it better not be on speculation alone, according to Professor Reiners. Now, I also want to remind people that notice how throughout all of these highlights, and I watched this entire thing, there was zero mention about how FTX met with the SEC that Mr. Professor Reiners speaks so highly of, and no one did their due diligence and still issued them a broker-dealer's license and had no idea that it was the biggest scandal of this century. That somehow never seemed to come up. But nevertheless, we got a little more to see here, and you're going to want it. Let me take you to it right now. We start right here.
Yeah, so I appreciate the question, Senator. Frankly, proof of reserves aren't worth the paper that they're written on. And I would just point to the so-called proof of reserves that Binance had from Mazars until Mazars pulled it off of their website and stopped doing any work for crypto.
Now, very quickly, does anybody knee-jerk reaction? Are you thinking what I'm thinking? USD Tether? Thought so.
Is proof of reserves not a worthwhile pursuit? Or
so audits are worthwhile.
So
I think audits are a worthwhile pursuit. And I think that is a single, certainly that this Congress should look at. There's no reason that crypto intermediaries, exchanges, should not have full audits. But proof of reserves are not full audits.
We were talking about an independent third party reporting to the Treasury. So I think that may address the point you were making about worth the paper that they're written on.
Yeah, and I would say one other sort of single is requiring these crypto platforms to segregate firm assets from customer assets.
Yep.
Wow, I tell you, this is remarkable, ladies and gentlemen. And I've got more for you as well. We got to skip ahead here just a little bit. I mean, how can we have any Senate banking hearing and we not at least play for you Senator Elizabeth Warren and her possibly coached questions that she may have here? I'm going to let this spin. Take a listen.
So, big-time financial criminals love crypto. Just last year, just in 1 year, crypto was the payment method of choice for international drug traffickers who raked in over $1 billion through crypto, North Korean hackers who stole $1.7 billion and funneled that money into their nuclear program, and ransomware attackers who took in almost $500 million. The crypto market took in $20 billion last year in illicit transactions, and that's only the part we know about. That is a lot of fentanyl and heroin, a lot of help for Iran and Russia, and a lot of money leaking out to terrorists. And that is precisely what anti-money laundering rules are designed to stop. Now, Mr. Reiners, you've studied financial technologies, including crypto, for many years now. And before that, you worked as a regulator. Why do drug lords and human traffickers in countries like North Korea and Iran use crypto instead of banks and credit unions or even Western Union?
Thank you, Senator. So crypto pseudonymity makes it ideally suited for bad actors. And when you couple that with the fact that crypto transactions are not subject to the same AML and countering the financing of terrorism.
AML meaning anti-money
laundering and the countering the financing of terrorism statutes that traditional financial transactions are subject to. Again, that just makes it ideally suited for people that want to do bad things.
So in other words, crypto helps those drug traffickers in rogue states launder money nearly instantaneously. Is that right?
That's correct.
All right. And if they couldn't use crypto, would ransomware gangs even exist?
No.
And why is that?
Because ransomware is the exclusive payment method of choice for ransomware hackers.
You mean crypto?
Oh, I'm sorry. Crypto is the exclusive payment method of choice for ransomware hackers.
100%. Wow. So we have money laundering rules that cover banks and credit unions and stockbrokers and gold dealers and even Western Union. But the current rules don't cover big parts of the crypto industry, and crypto likes it that way. In fact, the crypto industry claims that applying anti-money laundering laws to the whole crypto industry is, quote, not only unnecessary, but it's all but impossible. By the way, this is not a new claim. In 1970, Congress decided it was time for financial institutions to do their part to prevent money laundering, so it passed the Bank Secrecy Act, or BSA. The banking industry objected, claiming that complying would be, quote, a tremendous expense as well as a pain in the neck. The banks resisted. They brought legal challenges. They complained that it would be impossible to comply. And then after the law went into effect, they made it work. Now the crypto industry explains that they are amazingly innovative and creative, but they just couldn't possibly figure out a way to comply with the same anti-money laundering rules that everybody else follows. So, Mr. Reiners, do you buy the industry's argument that crypto is simply too special to follow anti-money laundering rules and that it would be too hard for them to even try?
I do not, Senator.
All right. Some in the crypto industry say that anti-money laundering rules can work so long as they exempt so-called decentralized entities, the crypto exchanges, lenders, and other financial intermediaries that run on code. In other words, they want a giant loophole for DeFi written into the law so they can launder money whenever a drug lord or a terrorist pays them to do so. Now, that is exactly what Colorado-based crypto exchange Shapeshift did when it deliberately restructured itself as a DeFi platform. And here's what it told its customers. They said, we're making this shift, quote, to remove itself from regulated activity. Translation, launder your money here. Mr. Reiners, should Congress be in the business of creating loopholes for money laundering?
They should not.
All right. Look, the rules should be simple. Same kind of transaction, same kind of risk, means the same kind of rules. And that's why Senator Roger Marshall and I are reintroducing our anti-money laundering bill to clamp down on crypto crime and to give regulators the tools they need to stop the flow of crypto to drug traffickers in places like North Korea and Iran.
Well, let's see, stop the drug flow and the cash exchange of the U.S. dollar, because there is no tool that's used for a greater purpose of illicit activity than the U.S. dollar, unfortunately. But there it is. But that didn't come up either. It's funny, that didn't come up, and it didn't come up that Gary Gensler sat with Sam Bankman-Fried and FTX multiple times, and not only does he not do the due diligence to discover that the company is nothing more than a dumpster fire, he actually awards them with a broker-dealer's license. There you have it, ladies and gentlemen. Those are the highlights. That's where we're at. Sorry for the long video, but you deserve to know this is what's going on inside the U.S. Senate. Not financial advice from me or anyone else. Hit the like and subscribe. Leave a comment below. I'll catch all of you on the next one.